Hello and welcome to the Chart of the Week. My name is Pete Stolzers and I'm the founder of www.oneoption.com. Before I get started, I'd like to encourage new visitors to view the introductory videos. If you're watching the videos on YouTube, the introduction is a three-part series. They describe my systematic approach to option trading. To learn more about my approach, please visit my blog. It uses the number 1 in the web address. To try my research products, please visit my research site. The web address spells the word 1 out. Both sites are linked, and www.oneoption.com will ultimately get you where you want to go. I also want to mention that if you're watching the Chart of the Week video on YouTube, it's divided into two parts. Make sure to watch the second part since it has the highlighted stock. 75% of all stocks follow the market, so that's where my analysis starts every day. Let's take a look at what the market's done during the last week. In this weekly chart of the SPY, we can see that the market's had a nice, steady grind higher, and it got all the way up to the 138 level, which is an intermediate term horizontal resistance level. Once it hit that level, it started to tire out and the market backed off on Monday. So it established a new high, closed near its low of the day. Tuesday, the market was very flat and very quiet. Today, it opened flat and gradually started drifting lower as the day wore on. Let's take a look at the 1 month chart. Here we can see very choppy, volatile trading action. However, it's been very constructive, and we can see this 128 level was a retest of the capitulation low from January. We'll see that on the 1 year chart, and because this only reflects closing prices, we won't see the intraday lows. So we made the low, retested, and since then the market's been able to put a nice rally together and hold most of its gains. So on a short-term basis, this is very constructive. On a 1 year basis, we can see the drop last August, the rally back in October to new all-time highs, and then we started a very steady downtrend. Now, if you draw a trend line across these tops, you can see that the market recently broke that downtrend line. This was the capitulation low, and it actually did dip down to this 125 level on an intraday basis. Bounced, we retested, and now we've bounced a second time. So one conclusion that I can draw from all of this is that we have a double bottom and the market's been able to hold that level. The fact that it's been rallying recently and has tested this resistance level, the next thing we'd like to see is for the market to pull back a little bit here, but make a concerted effort to try and break out to this SPY 140 level. We have banks reporting earnings next week. There have been a lot of write-downs, but there have been a lot of banks that have been able to raise capital. And right now the consensus is that the subprime crisis might be reaching its halfway point. It might even be past that halfway point. So next week will be critical in terms of where the market goes over the course of the next 2 or 3 months. I personally believe that it's a good situation to try and buy the dips in here, but I also feel that the market is going to trade within this range, SPY 140 to SPY 130 over the next few months. Even though the banks might have taken the majority of their write-downs at this stage, I still don't see how they're going to be able to grow their top line since unemployment is increasing. For the time being, I feel that there are still some bullish opportunities. Most of my trades have been on the bearish side, so I am market neutral here. I would like to buy dips, so I'm going to be looking for bullish stocks today, and most of the stocks are going to be related to commodity plays. So let's take a look at what we've got at one of my proprietary searches. The featured search today is called BDRE breakout. That stands for bullish day reversal early. We're going to be looking for stocks that have been in an uptrend but have pulled back slightly. Today, the stock is making a new 10-day high and it's attempting to resume that rally. So we're looking for a nice long-term uptrend, a pullback, and now the reversal is going to be the stock moving higher off of that pullback. This is one of the tables from my proprietary scanner, and here you can see at the top of the column, BDRE breakout signifies this particular search. What I'll be doing is I'll be looking at all of these different stocks and I'll be clicking on the symbol to bring up charts. Let's take a look at what we have. The first stock tonight is MTL. We can see that the stock rallied early in the week with the market. It did also pull back on Monday along with the market, had very flat trading here. And then today, on a day when the market was down, look at what this stock did. It rallied up, rested for a bit, right at that horizontal resistance level of about 136. After it pulled back to 135, it shot higher in the afternoon and it closed right on its highs. This is very positive price action, particularly since the stock traded against the grain. That means it rallied when the market was going down. On a 1-month basis, we can see a lot of volatility, a lot of choppy trading, no real trend, no momentum. On a 1-year basis, we can see that the stock really got into almost a parabolic curve in here, really got ahead of itself, but it's been very constructive even though the overall market has pulled back. Look what it's done. It basically held its ground when the market was declining. In February, when we got that small market bounce, the stock shot higher. Recently, when we tested that capitulation low, it did pull back, but now it's right back up and it's challenging those highs. So this is a very positive chart. This is a chart of RIG, Transocean. We can see here that the stock rallied up, gapped up higher 4 days ago, and when the market was pulling back, it was holding its own, held its own yesterday. Market pulled back today, stock rallied higher. Again, very constructive price action. This is an oil drilling company, and here we can see that fairly choppy price action, but mind you, the market's been very choppy. So we've been in a very wide range from 140 to 132 or so, and then now we have the big breakout here recently. On a 1-year basis, we had a big rally last year. Stock rested in August. By September, it rallied to a new high, and that high is pretty much held in place at 145 level. We had a pullback with the market, but look what we have here. This formation is a cup and handle. You had a deep trough, a rally back that tested that resistance level, and now the next pullback is even smaller. In fact, it's half of this first pullback. So there's the cup, there's the handle, and now we are breaking out to a new high. So this is a very bullish pattern. You can also see here that the long-term uptrend line is still in place. And when I talked about a reversal, here's your reversal, the pullback, and there's, here's the pullback, and there's your reversal. So this is the type of formation that we're looking for.